Hi, everybody, and very welcome to our event, the Tokenization of Assets and Digital Art. Thank you very much to our partner Bankenverband Stefan Punkel and Vienna Business Agency Alexander Wojtkowski for letting us be part of this year's FinTechWeek again. And a big thanks to AI Austria, the biggest AI community in German-speaking countries, also hosts the location today. AI Austria has been our partner since the beginning. Thank you, Clemens Wasner. My name is Prinz. I'm the chairman and co-founder of DLT Austria. DLT Austria is a non-profit association to promote distributed ledger technology. I have also slides, so stop it, go forward, and so on. I hope you can see the slides. DLT Austria was founded in 2020 with the vision of making Austria one of the leading locations for distributed ledger technologies. A digital networked global society thrives on data transactions and information exchange, but especially on trust in the truth and certainly of this data and information. So the distributed ledger technologies and blockchain solutions can technically establish this trust and ensure transparency, traceability, and data access. This can solve a multitude of systemic problems that delay digital transformation. Based on the view that technology, knowledge, information, and trust in technology are the foundations of successful digital transformation, the non-profit organization DLT Austria sees itself as a bridge between society, international DLT, and blockchain communities and the economy in order to actively promote the use of this technology. DLT Austria is designed as a proactive platform in which persons, NGOs, and companies play equally important roles. Members receive support and design opportunities on 3 levels. DLT Connect. As a trusted contact, we connect key stakeholders and enable the exchange and reinforcement of innovative impulses in a dynamic global technology sector through active networking. Interdisciplinarity, a spirit of cooperation, and respectful, critical rationalism are the pillars of our network. DLT Create. We create awareness for the possible applications of distributed ledger technologies and for use cases that add value and at the same time bring meaningful system benefits. In this sense, we see ourselves as a community-driven think tank of technology experts, scientists, entrepreneurs, and representatives who are active in this field. DLT Collaborate. DLT Austria is also a cooperation platform for companies, individuals, the public sector, and applied research. As an open think tank, we sustainably support applied development and use of distributed ledger technologies. In the sense of technological principles of a blockchain, namely open, distributed, decentralized, we are partners for cross-technology exchange. Sustainable answers to complex future questions in the application of distributed ledger technologies require consideration from a wide range of perspectives and holistic approaches to solutions. In addition to technical expertise in their respective field, the DLT Austria members are united above all by a passion for the topic of blockchain. Despite our different backgrounds, even together, we can't fully grasp distributed ledger technologies integrated. That is the nature of things. Anyone who claims otherwise is simply unserious. That is why we are taking this open platform approach with a strong focus on the expertise of the members, clustering the results of this exchange, spreading to DLT organizations, and making them available to others in order to develop meaningful use cases, inspired use to find us and the DLT Austria. So thank you for your attention and enjoy today's event and the wonderful guests. So it's your part.
Yeah, can you hear me? Yeah, okay.
And please activate your camera.
Yeah, just make sure that So sorry, we just have the hiccups. Okay, so welcome from my side. My name is Martin Bechter. I'm also a member of DLT Austria. I have a corporate background and venture capital background. Was doing startup fundraising the last years. I'm now CEO of one of the companies that we financed, and I'm invested as myself as well. But all this has nothing to do with crypto. Crypto is a big passion of myself. Crypto attracted me in the so-called rabbit hole very deep into it, and I spend most of my free time with this absolutely fascinating and yet complex topic. We hear nowadays headlines of which go like everything is going to be tokenized, the world gets tokenized, or headlines like that are very, very common. But what is behind them? We hear about cryptocurrencies, fungible, non-fungible tokens, security tokens, utility tokens, a lot of these technical and yet sometimes strange and unfamiliar words are flying around. But at the end of the day, it's something that any kind of value is going to be stored with the help of a blockchain and is getting to be transferable, and that is the key. And many, including us at DLT Austria, believe that in the future we will have most of the assets that we know of are going to be tokenized, from physical assets to securities, up until our identities or social media profiles. We believe this is just getting started. Yet for many people, it can become extremely overwhelming because, I mean, the speed of innovation in crypto is mind-boggling. It's extremely fast and it's hard to catch up. Few things are actually standardized in crypto, starting from a simple taxonomy and wording. People use same words in different aspects, and we all learn. And last but not least, crypto is also, well, polarizing, I would say. I personally believe it's also due to the fact that, well, some or many people earn and made a lot of money, but also many lose money in the space, and that does not really help a constructive and objective discussion. But with today's prolific and very experienced presenters, and then later on panel speakers, we would like to contribute to an education in the industry with the help of an open-minded discussion platform that allows also critical review on certain aspects. So we don't follow kind of moon boy talks. We want to have an open and critical discussion also, because this is strongly needed in the industry. So to our agenda, so we, as I mentioned already, we will start with first an basic introduction by Professor Philipp Sandner about the basics of tokenization, and then we will have three business use cases presented by entrepreneurs who are presenting, tangible, real use cases. But more to each of the speakers then later when we transfer to this. Just on the technicals on how we're going forward, if you have any questions and you're in the live stream, please post your questions in the YouTube chat. We will pick them up later after each presentation and pass that on to the speakers. And later after the presentations, as said, we will have a panel discussion where we have time to discuss the questions. Is Philipp already there?
Roman is the first one.
Okay, so we have to improvise a little bit. Philipp has some issues to join, so we will flip the agenda and start with the first use case, loob IO. So Roman Muehlberger is going to be the first presenter. Roman holds a bachelor in computer science from the University of Vienna. He's the co-founder of DLT Austria and also the co-founder of loob.io, a very new NFT project and platform founded here in Vienna. And and which was actually also born out of the DLT network. Roman will now introduce loob.io and its and how it's works. So without further ado, Roman, the stage is yours.
Thank you very much for introducing me, and thank you very much that I have the chance to be here. Yeah, my name is Roman, and after co-founding DLT Austria together with Ed, we also co-founded loob.io, which will be an open all-in-one solution, essentially for everything around digital assets and NFTs. Loob stands for Locked Outstanding Object Binaries, but no worries, I'm not judging if anybody forgets what it actually stands for. But the main point I want to raise is that we try to create an all-in-one multi-chain marketplace for NFTs, but not only a marketplace, we also want you to assist you in creating NFTs, basically on different artistic and technical levels, and make it easy to use. I will bring a few points later. In essence, you will be able to create, discover, collect, and sell outstanding digital assets with Loob. Yes. So you may ask yourself, because NFTs are actually quite popular. Many of you might have heard about it. Some of you probably are in this business. Some of you know a lot about it. So, but I will start to keep you up to date. So we see that NFTs have grown massively in popularity. For instance, the sales in 2020 spiked by 2021 by about 71,000%. Well, this market growth is actually something that we will all consider. A lot of people of you may have heard about it in the media, about, for instance, famous DJs like Steve Aoki, who told that they won more money and earned more money by selling NFTs than by being 10 years in the musical industry. Many people heard about some pixel JPEGs that were sold for incredible sums. Many of you also have heard for a lot of paintings, and these paintings have been sold by marketplaces, also by famous auction houses in the world for very huge sums. So the market is very there. There is a huge market growth, there is a huge potential, but actually this is not all what NFTs are about. NFTs are basically also certificates of ownership that actually provide you with the information that you are the owner of a digital asset, which can also point to a physical asset. And this actually is a huge market. Most people are not really in this market. They try to get it, they try to be more in this situation. It is maybe because creating and selling NFTs is not yet very intuitive, because because many of those technical aspects are not very interesting, maybe very complicated for a lot of people, and they are not very familiar of having this. And that's why we actually tried to make an easy all-in-one solution. Can you go back to the previous slide, please? Sorry. All-in-one solution that improves the usability and the general use of NFTs. We also want to support the creation and the tokenization and to help you with the monetization of NFTs, because there is still no one-stop shop where you can do all of that and stay in one platform, because you do not need another platform to handle NFTs. And we also want to provide the NFT platform in the DACH region, especially concerning the strict regulations that we have in Austria, in Germany, in Switzerland, and mainly in the European Union about it, which is very important, because we need to consider a lot of situations where also criminals try to abuse it, and we try to condemn them and try to prevent them from doing any criminal activity as far as possible and comply to the law in Central Europe especially. So we also do not see a link between platforms that link new media art and NFTs to also protect the ownership of the rights of the creator. And that's why we also wanted to combine NFTs and the technical aspects of blockchain together with AI art creation. So imagine that the market size for AI art creation is actually about $300 million. There are even portraits sold that were modified with artificial intelligence for more than $400,000, which is huge, which means that it's a growing market. It's an important market that might be even more relevant in the future. which is why we actually want to combine those situations to actually help creators, artists, to use the technology of artificial intelligence in order to create outstanding digital assets, which is also pretty much a bit thing that we will combine it somewhere with the metaverse. A lot of people may have heard about it, like all these avatars running around and a lot of companies buying land in this situation as well. In case this, we see a growth of about 190,000%, especially in concerning the NFTs, because NFTs actually show the ownership of items that are owned in the metaverse and are mostly used for that. That's why we will also view how we can support in this situation. Good, and this is what actually wants me to bring you to the vision of Loob. And the vision of Loob is, in essence, doesn't depend if you're a collector, if you're just an enthusiast in this market and want to dive into it, if you're an artist, if you're a starting artist or a professional artist, if you're just a fan of these blockchain topics and an interest, or maybe you're an investor who wants to sell and hold NFTs and digital assets for some time to gain profit, or you are just a follower, creator, or a holder of all of these items. Well, we hope that for everybody who is out there and interested, to help them very easily create and sell their content online via NFTs. And it should be as easy as you might use an e-commerce site, like for instance, Amazon, or any other site you like using in your free time, maybe like Instagram, Facebook, or something else, which is very intuitive from the user interface. We also would like to provide this usability for the NFTs. Yes, so in essence, our mission in this situation is in essence to combine all these different topics, like we would have different modules in it, which are basically the creation house, where we basically can let the user upload images, where you can simply store the content, and you can also store it as an NFT in a decentralized storage, which means we would like to bridge the Web 2.0 and Web 3.0. We would like to provide an easy-to-use entrance point into Web 3.0. Currently, tokenization is a bit of less usable because we talk about smart contracts, DAOs interacting with each other. It's very difficult, of course, and this is how we want to bridge the old world of Web 2.0 to the new upcoming world of Web 3.0, to provide an easy-to-use solution and to try to embrace decentralization as much as possible. For instance, by providing a decentralized auction house, which will be completely decentralized, executed on the blockchain, where from every bid to every selection of every winner, everything will be happening in a transparent way on the blockchain. And that's what's important, which leads us to our platform, which combines different components. Our components can be seen as, for instance, an module to upload digital art, which is, first of all, could be JPEGs, PNGs, or different other image files. Currently, we are working with artworks. Later, we will also go into the area of having different file formats, like, for instance, audio files, multimedia files of different kinds, maybe also other files like usual PDF files or binaries, for instance, for computer programs. And this enables you to upload the digital art, to edit the digital art manually in our platform. So you don't have to use any other tool for that. So it's very easy. You have a lot of filters. You have the tools that you can also edit it. So you don't have to do everything on your own, but you don't have to, of course. You can also create it from the scratch. And then we also have powerful artificial intelligence modules that enable you to transmutate digital art, which means that we have different filters, and these filters use modern technologies like neural style transfer, later also GANs, to transmutate an image into something more powerful, like a cartoon, or like let, for instance, an image or some painting look like it's painted by an impressionist painter. But this is, of course, combined with the blockchain part, which is not, until yet not very usable and not yet open to a huge market, because unfortunately many things are very technical, still very nerdy, and not performed very well, which means that we also would like to enable as many modules as possible to cover such a broad number of users, with having multi-chain support so that you can choose your chain where to tokenize it. We also want to enable you to just simply, when you create the digital asset, simply with a few clicks, you just can create it. Just you go to tokenize, you select the chain, and then you select how many pieces you want to create. You can then tokenize it and it will be displayed in our beautiful art gallery. In this art gallery, you can really look through it and you can see about your artworks. You can filter it for very different categories. If you select some categories, everything from abstract paintings to animals to all different other digital arts that can be there, the recent ones and to also the most liked ones. And in this case, you can also sell it at first. It will be very easily, just simply with a few clicks. You can create an auction or a direct sale. And this will happen in our next module, which is the auction house, where you can either select direct sale or in combination with an auction. Like for instance, you can say, okay, let's try the auction, but if a certain fixed price may reach its point, in this case, you say, okay, I'm happy. And in this case, it can be sold also for a specific price. Well, and it is not all we try to offer you. We also want to enable that fiat payments might be possible in the future. So many people are complaining because some people cannot handle cryptocurrencies. Some just want to own NFTs. Some want to buy some artworks from famous artists, and they have still trouble with cryptocurrencies, which means that for direct sales, at least, there must be a solution that they can pay the way they used to pay like years ago without any trouble and as easy as in any online shop in the world. And in addition to that, we also will offer multiple NFT services. Because we would like to build a whole ecosystem. That's why we cooperate with different names from our Austrian and maybe also Central European ecosystem around NFTs and crypto companies. Yes, as a short overview, our main modules are basically our creation house, where you can unleash your creativity with the powerful AI tools and also manual tools, where you can actually work on this platform, which is combined to our art house, where you can publish them, where you can tokenize them, and you can also view and display them, and they can also be like commented and shared throughout different social networks and everywhere else. And then, of course, our auction house, which will be completely decentralized, working on smart contracts, having Loob as an entry point for easy to use as, for instance, you use eBay auctions or auctions from any other Web 2.0 application, only that we try to bridge the world here between Web 2.0 and Web 3.0. Yes. But yes, apart from our three main modules, we actually want to offer a lot of other features, which are pretty interesting. A few of them are outlined exactly here. We have an AI-powered art creation house. We also have a social network, which is a bit similar to Discord, where people can exchange ideas about different NFTs, about different projects, and also communicate. If they, for instance, want to additionally send a physical painting to the NFT that they sold, they can communicate over our social network to manage to see which address to send to, and also exchange, maybe thank somebody for his beautiful NFT, and also build a small community around NFT projects. We will offer to get a managed wallet as well, which is full custodial. That means that we have non-custodial, of course, and full custodial. So you may be able to choose which ones you have. Like if you already have a non-custodial wallet, like MetaMask, for instance, certainly you will be able to choose that, but not only that, but many other wallets as well. But still, there will also be the possibility that the wallet will be created for you. So yeah, after the Loob Art Studio, displaying in a Loob Art Gallery, there is also the possibility for the multi-chain tokenization. So we will have the most popular chains. At first, all EVM-based chains or many EVM chains. Some will be added in a later stage. Two are already available, at least now in the beta version, in the testnet, which are Ethereum and Polygon, where we can tokenize them and then also sell it over the blockchain as NFT auction or direct sales. And finally, we will also bring out an ecosystem token for governance and utility on our platform, which will first start off with private sales, and later it will be also available for the public in a situation. But of course, such a huge project is not much without a great team. And that's why we would like, that's why myself and I co-founded it together with Prinz. We actually met together at a consulting company where we were working on blockchain projects where already I was writing my master thesis as an intern, and together we were working on 2 projects which were very interesting. You could learn a lot from it, also from bridging the environment between Web 2.0 and Web 3.0 a bit. And later we co-founded DLT Austria, the Association for Distributed Ledger Technologies Austria, and later we also saw the gaps in the NFT market in order to enable a solution which is easy to use and covers as many modules as possible to build a whole ecosystem around NFTs. We're also very happy to have in our core team onboarded Zoltan, who is an expert in the field of blockchain smart contracts. You can actually not really find a better one than him. To have him as investor and advisor at Loob, who is working as a head of blockchain at Fachhochschule Technikum Wien, a renowned Austrian academic institution, and also serves as CEO and CTO of MyPrivacy. And we're certainly very happy to also have Alexander Berger, whom we could onboard in the areas, especially around gamification, UI and UX. And we work closely together with him in order to establish the best user experience in terms of gamification and user interface testing and usability in general. But of course, this team would not be something if we didn't have very good Linux guru, who is a senior Linux advisor in our company. And he is a very proficient person. He knows Linux maybe better than many other things. And that's why he is actually the best for our job. And nothing without our coding king, who is a senior developer and who can develop extremely great applications and has a lot of experience. So that's why our whole company and our whole marketplace would not be anything without our great team. Well, now we want also to say that we are partnering to create a whole ecosystem, because we know we have multiple products and projects, of course, about NFTs. And that's why we try to onboard on a B2B basis a lot of interesting companies, interesting initiatives. And that's why we partner together with DLT Austria, the largest association around distributed ledger technologies in Austria, AI Austria, the largest association for artificial intelligence and general machine learning stuff in Austria, and Geronium, who are pretty good in creating digital assets and also try to cover the inheritance of digital assets in their company. But not all of them, and many more are about to come. And we're also lovely to talk to interesting partners who would like to join. And by joining, for all of you who have questions, you can easily scan the QR code and follow us on LinkedIn. You can text us at Telegram, Twitter, or you can also scan the code on the very right side. And if you join it, you can definitely expect an airdrop at some time. So everybody who actually loved the presentation, who loved what we're doing here, please scan the QR code, please follow us. For everybody not yet loving it or having questions, please follow us. I'm really happy to answer your questions and also have your feedback to all of that. Right. Thank you very much.
Thank you, Roman, for this comprehensive presentation. If there are any questions, I see that currently there are no questions. If there are coming up questions, we can probably tackle them later on in the panel discussion. But if there are not any questions, then we would immediately continue with our actually first speaker, who gives us an overview about the basics of tokenization. Professor Philipp Sandner actually does not require much of an introduction. Everybody in the crypto space knows Philipp Sandner. It would take me a long time to introduce Philipp, all his initiatives and what he started and where he's contributing, but maybe just the highlights. Philipp Sandner founded the Frankfurt School Blockchain Center in 2017, which is offering a lot of educational content, basic content, also free available up until very comprehensive and best in class master programs. So everybody who wants to learn blockchain, definitely a very good starting point to look at Frankfurt School Blockchain Center. He also is an advisor to many governments, including the European Union. Philipp hosts also 2 podcasts, Block 52 and Irgendwas mit Krypto. Philipp is also an author of 2 blockchain books, and last but not least, he is also an investor and active advisor to many venture capital funds. So Philipp, it's a great honor to have you here as our guest, and I will hand over right to you.
Yes, thank you very much. Actually, I have an issue with my camera. That's why we had to swap the agenda. I thought I'm able to make my camera working, but for whatever reason it doesn't. I have a new computer, and therefore I'm sorry. And please provide me the rights to share my screen, if that's okay. And then, there it is. And then we will proceed directly with the topic around tokenization. So first of all, let me briefly present myself. We have founded the Blockchain Center a couple of years ago. We are focusing on crypto assets primarily. In the past, we also did industry projects and so on. But I think you all know that so far industry projects, think of Bosch, Daimler in Germany, Siemens and all these companies, they have not done much in the blockchain field. They tried it, but it didn't work. And therefore we can now also say that what does work is the crypto world. I will talk about this primarily, and therefore let's focus here on this topic. The Frankfurt School is a private university sitting in Frankfurt, of course. We are privately funded, and the Blockchain Center itself is also funded by a couple of companies. You see them on the lower half. They are supporting us such that we can do our work. Just to show you what we are doing very briefly, we are maintaining the so-called Blockchain Academy. That's a compilation of dozens of YouTube videos where we try to share our knowledge for free. Then we do the Crypto Assets Conference in Frankfurt. Some of you might know this. Then we have created a subsidiary jointly with another entrepreneur called Intas. That's a consulting company for digital assets. My favorite projects are called DLT Talents, DeFi Talents, and NFT Talents. It's basically online coaching. It's an idea which emerged during the Corona time, and we now have 3,200 applicants per year. And of them, we are educating, for example, 400 women per year and 400 DeFi talents per year to empower them for the blockchain space. That works quite well. And then also, I think noteworthy is the so-called Digital Euro Association, which is a non-profit association which we have spun off, focusing on the digital euro, and also the ITSA, which is also a non-profit association for token standards and DeFi tokens in the future. With this, let's move on and directly jump into the topic. So with this slide, I would like to lay out the multiple domains which are currently emerging, and you need to view them as multiple domains being a little bit separate from each other. 5 years ago, we said blockchain full stop. Then 4 years ago, we said crypto assets on the left-hand side and enterprise blockchain on the right-hand side. Now we see that enterprise blockchain did not work, but what does work is multiple crypto domains. So we also see that the digital security space is emerging. Think of debt financing, tokenization of assets, and other things running on top of Ethereum as a smart contract platform, for example. Then we have the topic around the euro on blockchain. This can be a stable coin, then it's running on a smart contract platform. Think of Tether, Circle, also unfortunately think of the Terra Luna project and so on. And on the other hand side, it's the central bank, that's the European Central Bank, also doing things in this domain. Not necessarily with blockchain technology, by the way. Then there is the largest domain coming up. That's what I would call decentral protocols, decentral crypto assets, with the below segments, Bitcoin, Ethereum, DeFi, NFT, and so on. And on the horizon, there are two also very fascinating topics popping up. One is CO2 tokenization of blockchain. So that's basically literally connecting the farmer in Brazil who is absorbing CO2 from the air with a German-speaking Mittelstand company who is needing CO2 certificates because of their production facilities and identity management, right? Today, I would like to talk about tokenization of assets. That's the first domain. Speaking now for Germany, we have luckily the situation that we, for whatever reason, have good laws in our countries. It's a mystery that we have these good laws, because Germany is not a good country when we talk about digitization and digital transformation. But speaking for blockchain, for whatever reason, we have very good laws being made. That's the so-called crypto license, which is now in force since 2.5 years. We have the so-called Digital Securities Act. In German, we call it Elektronisches Wertpapiergesetz, but in English it sounds much more cooler, Digital Securities Act. And we have the Fund Location Act, the Fondsstandortgesetz, which is also there to basically promote crypto assets for investment funds. And on the European level, we have the so-called MiCA regulation, which is being discussed now for a couple of years. It's now in the finalization, and it's mostly a good regulation, but there are some very tough rules there. For example, concerning the enforcement of identities of wallets, the TRF topic, that's very dangerous. Then the question whether DeFi software companies need to be regulated and so on and so forth. So there are some points in there which are very dangerous for Europe. But besides this, it's a good regulation which will come into force next year. And I think it's fascinating because this regulation will regulate 400 million people in the entire European Union. That's massive because on the entire planet, there is no other regulation which is in a unified way regulating 400 million people, everything related to token. The unfortunate thing, as I said, is that there are some rules in there which are not working as desired, which will also harm Europe. But let's see how this discussion is finalizing in the next couple of weeks. Okay, let's talk about tokenization. These slides, they are now 2-3 years old, but they are explaining very nicely what a token is, right? So the Liechtenstein guys with the Liechtenstein Blockchain Act a couple of years ago drafted a very nice framework on how to regulate everything around the token economy. So there was Bitcoin as a cryptocurrency in the beginning. Thereafter, there came these so-called utility tokens. Some of you guys remember them as ICOs a couple of years ago. But the joint thing is here that there is a token sitting on a blockchain system, and the blockchain system is managing the digital property on this token. And what people now have done is, with the utility tokens, they have packaged a so-called software license into the token. So whoever holds the token is able to use the software. That's basically partly also relevant for the DeFi space and also for the NFT space. Then we have other tokens like stable coins, where you have the token as basically the object which is carrying something. You can package the euro or the dollar into it. Then you have stable coin, or you can have the token on a blockchain system. You package into it a debt instrument, an equity instrument, a share or whatever, and then it's called security token. So you see here, on the right-hand side is the technological solution. It's called token on any random layer 1 solution. And on the left-hand side, people have tried to package all kinds of things into these tokens. That's how the token container model emerged. And I think it's, at this point of time, the best way to explain what a token is and will be in the future. So imagine, in terms of tokenization, you would like to make this diamond being investable by 5,000 investors, right? So the key point is here, and this is something which is very, very, very important. The key point is here that in case you want to make this diamond investable, it's not about the diamond, but it's about the right of ownership. So what matters is who is controlling the right of ownership on the right of ownership of the diamond, and whoever controls the right of ownership indirectly controls the diamond. So in case you are now transferring the right of ownership into a token, so the token is the container, you package the right of ownership into the token. So you bind these things together, then you can move around the token on the entire world on blockchain networks, layer 1s. And this way you are moving around the ownership of the diamond, even though the diamond remains physically in custody in some kind of vault, right? So that's the token container model. So in case we talk about tokens, then tokens can be said to be an empty container, and you package something into the container. You can package the euro, the dollar, equity, debt instruments, you can package NFTs, art pieces, images, everything into this container, and the blockchain system controls the property on this container with the right and other things inside. I think that's a very nice approach to really understand what tokenization is about. So therefore, in the future, you can put everything, as I said, as a right into the token, and this way you can move the token around, and the token then is nothing else than a digital representation of a right on a blockchain system, right? That's how the Liechtenstein people defined it. And now, 2-3 years later, we now see that the Liechtenstein people have been right. That's an excellent model to really make people understand what is a token and what is a right and how does this fit together. So therefore, to define it, a token is a digital representation of any right out there. So how does tokenization of assets now work? It's we need to view the life cycle here. So first of all, there is the asset. The asset basically can be, for example, a company. It can be real estate. It can be a machine. It can be cars. It can be art. It can be IP rights. Anything out there. And tokenization means that you are making these assets investable. Investable means that you need to have traditional formats of the capital market, such as equity, debt, fund, or other constructs, to basically take the money and funnel the money into these assets to make it investable. Therefore, we have to not just specify the asset, but we also have to specify the so-called, let's call it token type. And here, the key point is that we now know that you can't tokenize assets right away, but you have, and that's very important, you have to package an asset into a legal entity, and then you have to tokenize the legal entity to make it available. All other constructs are not perfect because then you can't make assets tradable, right? It's possible, yes, but in case you want to make assets broadly investable and also tradable, you have to package an asset like a machine or a real estate object into a special purpose vehicle in a small legal entity and then tokenize it, right? It works as follows, just being very quickly here. So you have the traditional articles of association, as in Germany we call it Satzung, of a GmbH or any other legal entity. You then bring it together with a smart contract if it's legally allowed. The smart contracts is this way digitizing the shares. The shares is then being distributed to the investors. The investors are holding the tokens, and the tokens with the shares in it are then representing the ownership of the company. And the real estate object, for example, is in the company. And this way, the investor is indirectly holding ownership of an asset, which then can be tokenized, right? Let's go back here. What happens next is the token will be issued. That means it's technically generated. Ideally, you want to have a security prospectus being granted, because otherwise you can't sell it easily to people. And in case you manage to do this in a nice way, then you can also get it passported through throughout all European Union member states. So with this, you have the allowance to make sales for this type of token, right? Especially with the security prospectus. But it's a difficult process, right? It's very, very difficult and costs a hell lot of money. Once you have done this, you can sell this token to investors. Investors need to be onboarded. They have to go through a compliant KYC process because the rules in the law want people to be identified. And once this is done, you can then finally create a trading venue with multiple settings to be able to allow people to sell their investments then in the market. That's the entire chain which needs to be controlled. And why the key point is mentioned here. For example, companies thought of tokenizing cars. People thought about, or startups thought about tokenizing machines. And the question now is how to do it, right? People tried to directly tokenize cars or directly tokenize machines, for example, with equity as ownership or with debt tokens, but people did not succeed with it because people found out that then their tokens cannot be traded, right? So to make people trade it, you need to wrap this asset into a small vehicle, like an SPV. SPV means special purpose vehicle. And then you're not tokenizing the car, but you're tokenizing the SPV and its shares, yeah, then it works, because then you have an basically a legal structure. You can have a securities prospectus, and then you can trade it on all kinds of markets. And now it gets interesting, because, well, what I explained to you so far is basically the past reconciled in a couple of slides. So whatever happened in the last 3-4 years, I try to put together in these kind of slides. And now in 2022, we now have recognized, as with we, I mean the blockchain ecosystem, the financial markets, the lawyers, and everybody out there, we have recognized that the holy grail is equity tokens with a security prospectus, and all this being able to be traded on a secondary market, such that those people who are investing in the asset can also get their money back by selling their tokens. And you see here that this is the holy grail, which so far has not yet been found. Because, for example, speaking for Germany, we cannot have equity tokens in Germany. We only can have debt tokens and fund tokens. So the holy grail is not possible in Germany right now. In Germany, we had a couple of token projects where a security prospectus has been granted, but only for debt tokens. And now, today, we have heard the news that the inflation rate in the EU area has risen to 8.0%. So any debt instrument which is awarding you with an interest of lower than 8.1% leads you to the situation that you are investing money in a risky project, but you are then still having a loss because you're getting, say, 6% of a debt token, but the inflation rate is 8.1%. So you're losing 2% of money, even though you are investing in a risk asset, right? That's the issue. And given the current situation with the inflation being here and maybe even increasing in the future, we have to have equity tokens, right? From a German perspective, that's not good, because our laws here are not allowing us to have equity tokens yet. It's on the regulatory agenda, but only probably in a couple of years, right? The next point is the trading venue. At this point of time, there are hardly any trading venues for security tokens. We know that Binance has tried it in Germany. BaFin didn't allow it. We have other experiments being done in the entire European Union and so on and so forth. But as I have said, the holy grail, combining these green aspects here, equity tokens, security prospectus, and trading venues, the holy grail has yet to be found. And as I have said, that's not the holy grail, but this is what worked, for example, in Germany. But these companies doing this, they succeeded with good projects, but they also had difficulties selling these investment products to the customers. And my personal opinion is that these difficulties arising because it's debt tokens, right? Debt tokens are not inflation resistant. We have other experiments being done where real estate has been tokenized in the form of debt tokens, including a security prospectus. But companies started in this field. It's very, very tough and very, very complex. But these companies have not yet been able to create a trading venue. So they allowed investors to invest, but at the same time, an investor could not get his money back because he couldn't sell the token yet, because the trading venue wasn't existing yet. So that's, again, as I said, also not the holy grail. Then we have art pieces being sold as ownership tokens. This is basically working. It's similar to equity, but with ownership tokens, you don't get BaFin approval, then you can't make it perfectly tradable 24/7. So the trading venue is missing. So this is also not the perfect holy grail, right? So the holy grail needs to be found in the future. And I think this is something we will see now. There is one company which will launch in the next weeks, which potentially could bring this entire tokenization discussion one step ahead, but let's see. It's basically the first trial to tokenize such a vintage car here on the left-hand side. They do it with the Liechtenstein framework, where they are using the Liechtenstein Aktiengesellschaft regime to tokenize shares. Yeah, so that would be equity tokens. And they will also try to build a trading venue such that those people who are investing can also get their money back 24/7. Yeah, so it might happen that these companies, this company brings this entire discussion around tokenization one step further. And you see here, by the way, very nicely technological progress. You see back in 2019, first experiments have been made. These have been improved in 2020, 21. Now you see here that it's again improved. And at some point of time, maybe in 1 year, 2 years also, and so on, there might be found the Holy Grail. So you see here companies are, because of competitive edge and different regulatory approaches, they are really striving to improve this to make assets investable in the future, also compliant with the threat of inflation. So where are we right now? There is the horizon of the past, which is existing already, crypto assets. Then we have first sample assets being tokenized. I explained this, art, real estate, vintage cars, and so on. And the next step, we can expect this maybe for 2022, could be complex business models, which you could also call pay-per-use business models, assets as a service, and so on and so forth, where, for example, industrial assets like solar panels, windmills, tractors, machines, and other ones are basically forming a small profit center. I think of the tractor being a small profit center. The profit center is there to compute profits for the tractor. With the profit of the tractor, you can compute a return on investment. And with the return on investment, you can then sell this industrial asset towards investors, right? Nobody has tried this yet, as far as I know, but there are projects there which are trying this, and we can expect things like this to hit the market maybe next year or in 2 years from now. This can be primarily interesting, by the way, for the ESG discussion, because you know that all around the world, also in Europe, there will be billions being spent on ESG assets like solar panels, windmills. You know, you see it in Spain and in France and all around Europe and also elsewhere, but somebody has to finance all this, right? The government will not do it, not everything. So we need to have private funds flowing into such assets. And yes, you can solve this with traditional closed funds on being listed on stock markets and private equity companies, but it could also be a very interesting topic for tokenization of assets, and you are able to tokenize such industrial assets like solar panels and so on with this profit center logic on such tokenization markets maybe in 1 or 2 years. So this slide here describes where we are coming from, where we are right now, and what is basically the next step, what we can expect. So in my personal opinion, I think that the tokenization is best being made when you are wrapping an asset into a small legal entity. You are tokenizing the legal entity with equity or debt instruments and use this as a fundament to then get security prospectuses, which then can be traded on secondary markets to allow investors to also get their money out again on a 24/7 basis. That would be as I said, the holy grail. Yeah, and where are we going? I think right now we see in our world that we have many bankable assets. You see here gold, money, stocks, bonds, all kinds of things. All this will be tokenized sooner or later. Some of the stuff is already working. Other things will happen in the future. So that means you are tokenizing such assets on the blockchain, and this way the blockchain works as a register of the ownership of all these assets. And with what I have just explained in the last couple of minutes, we now see in the next 5 years, maybe 10 years, that all kinds of new assets will be capitalized. So will be, let's call it, will be financed by such newly emerging markets. So it can be single real estate objects, can be art pieces, can be patents, can be logistics centers, all kinds of other things. The ownership would be fractionalized, sold to investors, happening with debt financing or equity financing, which could be inflation resistant. And therefore, I think we see an opening up of all kinds of asset classes from now on in the future. It took a while. Yeah, the promises of tokenization of assets are out there since 4 years, but I now think that this year, maybe next year, we see that much more will happen in this domain because technology is progressing, lawyers are getting better, consultants are getting better, startups are improving, and so on and so forth. So we see a small industry being emerging here. Yeah, with this, I would like to close this speech. I hope I have been being into the time frame, and we can also maybe have 1 or 2 questions if you wish. Otherwise, I hand the microphone back over to you as the organizers.
Philipp. Thank you very much, Philipp, for this very interesting overview. And you tackled, maybe I can just add one question, because you had added this important point of the holy grail of tokenizing, basically as an intermediary step, a company that holds the asset. So as I hear you, this is at least in the German-speaking world not yet possible. Do you think at the end of the day, does it not mean that it has to develop new kind of centralized kind of stock exchanges that allow a tradable, basically blockchain tradable shares?
That's a very interesting question. Yeah, so I thought about these questions with friends 2-3 years ago. At that point of time, it has been promised that security tokens will be the next super hype, which did not happen, by the way. And at that point of time, there have been many trials to set up such security exchanges. For example, Tokeny tried it, INX tried it, Binance partly tried it a little bit, and so on. Börse Stuttgart in Germany tried it, right? So far, nobody succeeded, but I still think the question is very, very, very good. And I think that such new type of exchanges will be emerging, but it might take some more years. Yeah. So the promises of many people a couple of years ago, actually including my own expectations, have been wrong. It takes much more longer than expected. But the way to go is clear. I think these security token exchanges, new exchanges arising, will emerge here.
Yeah, probably the bottleneck is then basically regulations and laws, right? Because I mean, at the end, I mean, the best example is real estate. I mean, you need to know who owns the real estate, who is in the registry, so that finance will not be able to do this on their own, right?
Exactly. So that's why I also focus on this. The only way would be that you take this real estate object, you are handing over the ownership of the real estate object to a special purpose vehicle, for example, sitting in Liechtenstein or elsewhere, and then you're tokenizing the shares of this legal entity. This way, you're tokenizing indirectly. But until for example, the real estate register in Germany or in Austria is changing, I think that will take years.
Yeah, absolutely. Are there any questions in the chat? Let's just have a short look. No question. If there are no other question, maybe Philipp, one last question, because you mentioned the very hot topic, MiCA. And the question is, I mean, if we observe currently the discussion that's going on in the US, I personally have the feeling that there is maybe an increasing awareness. It's not only that certain incumbents and financial system is, let's say, shaken up and at risk and something to lose, but also there is something to lose as a location, as a state, in terms of innovation and future, let's say, location policy. When you hear the discussion in Europe here in terms of MiCA, is that in the mindset of European policymakers, in your opinion? So means innovation, future.
That's such a difficult topic. You know, my personal opinion is, yes, this is in the mindset of the people, and they are giving their best to somehow position Europe in a good state here, right? They are trying their best, but how they do it is still wrong. So even if they would like to change it to the better, it will not work. That's my personal opinion. And why is this? Because, for example, with the stablecoin discussion over here in Europe, we are kind of happy that we are not having stable coins. The German Ministry of Finance in Berlin is very, very happy to have basically pushed Facebook's Project Libra off the continent, and so on and so forth. So what is the result? That 99% of all stable coins are US dollar based, right? There is no significant euro stable coin, and there also will not be a significant stable coin. So the stable coin discussion, for example, has been entirely lost to the US dollar at this point of time. Then with the current MiCA, as I have said, there are some very big problems there, which will lead to the fact, for example, that those companies which are creating companies and protocols for the NFT and for the metaverse space, they will not go to Europe, because the MiCA will lead to the fact that these companies will have it more easier elsewhere. So the companies in the metaverse space, to some degree, will not be domiciled in the European Union. So what we see here, it's my fear actually, that what we have seen with companies like Amazon Apple, Google, Facebook, and so on, which are all sitting in the US, will be replicated one-to-one for the Web3 area again. So all these companies will not be domiciled in the European Union because the MiCA, with their enforcement of identity of wallets, will make it so difficult for companies that companies will decide to go elsewhere. But the key point is the following, is it bad? Yes, but there are 3 levels here which we have to distinguish. First of all, I, as Philipp, and you as Ed, and you as Martin, you can still individually, as a private person, decide to participate in the Web3 by simply purchasing a token. Yeah, it's a free world, so you can benefit from this movement, from this growth, and so on, as an individual person. This is not prevented and it's not banned. So you can benefit, I can benefit, and so on. Even more so, you, I, and everybody here in the call can also decide to make a working contract with an protocol or Web3 company sitting in Singapore or in Dubai or elsewhere, so we even earn money by this growing field. But still, the last segment here is the corporate level. I think the risk is there that many companies are not choosing EU as their primary domicile, which is pretty bad. So the taxation on this level will happen elsewhere. But the good thing is here, Europe is not losing too much here because we as individuals can still participate. We can purchase a token and we can also work for a protocol which is domiciled elsewhere. And think of this word elsewhere. Elsewhere does not necessarily mean we are talking about Singapore, Dubai, or the US here. It can be as simple as Switzerland or the UK. Yeah, so it's just around the corner. That's why, for example, we see in the crypto valley many companies of protocols setting up their domicile over there, and for example, not in Germany. Yeah, but still, I can still purchase a Tezos token, even though the foundation is in Switzerland. Yeah, so it's multifaceted. So it's not just bad and not just good. It's somewhere in between. That's why I said yes, but blah blah blah.
Yeah, and I think that, in my opinion, this is completely underestimated by policymakers because
it is.
After COVID, companies and employees are way more mobile as well, so they will much easier move than even before without losing employees.
The key point is, the policymakers in Brussels and elsewhere, also in Vienna and in Berlin and Paris and Madrid and so on, they do the best what they can and they have good intentions, right? But to some degree, they are not overseeing the second order effects and the third order effects, which are then happening down the line. That's the problem.
Okay, I see a question in the chat that refers to real estate, but since we anyhow will move now to another interesting use case, real estate, we probably keep that question for later on. So with that, Philipp, thank you very much for your presentation, for the discussion, for your time. Very much appreciated, and all the best. Thank you.
Yeah, thanks.
Thank you. Bye-bye.
Good. Then next on the agenda is now an already several times, just a second, we just the screen again, and already several times mentioned, well, very prominent use case of tokenization of real estate. Our next speaker is Michael Murg, CEO of Brickwise, an Austrian company that is exactly tackling this topic, tokenization of real estate, democratizing investments in real estate. Michael is also teaching on the FH Johanneum. He's the CEO of Brickwise before he founded a robo-advisory platform. And well, other than, let's say, tokenization of apes and funny profile pictures that we nowadays see on various NFT platforms, tokenization of real estate brings this interesting use case of basically bridging crypto world, blockchain world with real physical assets. So without further ado, Michael, I pass the floor to you, and we're very much looking forward to your view on tokenization of real estate.
Thank you, Martin, for the introduction. I hope you can see my presentation already. I'm going to talk about digitalization and fractioning of real estate ownership by tokenization. So what I'm going to show and talk about now is more or less a bit more of a user perspective, as our users see the topic real estate tokenization from their perspective in the app. But before that, let's motivate how we came to the topic. Research of the last years showed that more than 51% of Austrians and also Germans private investors would like to invest in real estate, and that's actually the motivation we came from. But when you dive a little bit deeper into it, you see that only 20% do. And there are four very, very obvious and actually common knowledge reasons for that. But let me just wrap it up in a minute for you. The first one, compared to any other financial investments, such as like savings or any securities, stocks or bonds, real estate investments are rather complex. Inspections has to be done, contracts, land registration, maintenance, and in the end, of course, to gain any rental return, you have to rent out any real estate. The second point is that real estate investments are rather capital intensive. The average real estate price for an apartment in Austria is 300,000 euros. The average free available amount for investments in Austria is between 20,000 and 30,000 euros, which means for small investors, that's usually only affordable through loans and of course also subject to huge cluster risks in the asset class of real estate. The third point is illiquidity. There's actually no trading. There are no trading venues, which makes it difficult to buy or sell the property quickly at the price that reflects the market value. And also, if you have already found a buyer which is willing to pay the price you would like to have for real estate, it takes 2, 3, 4 weeks until the transaction has been done. And the fourth point is the transaction costs. Real estate investments are expensive. That the average transaction cost of real estate in Austria and Germany is approximately 10% and even more of the purchase price. Those were the problems we wanted to tackle as Brickwise, and we came up with the vision to make real estate investments very easily accessible to everyone and also at any time, which resulted in the end in building up a mobile app. So to wrap it up, what was our plan? We wanted to digitize real estate ownership and by using blockchain technology. So what we do in the end is fractionizing real estate into small shares. We wanted to make them investable for really nearly everyone and able absolute secure instant peer-to-peer trading via our decentralized trading platform. So from a user perspective, from a real estate investment perspective, what we do is we provide our clients a 100% digital real estate investment experience from buying to managing the real estate until the selling process and everything in between. That's what we planned. Let's have a look into our app. How does it look like? When you open our app, you will see a marketplace. I'm very sorry that the app is in German. It's only available in German at the moment. So you are going to see several real estates. You can select single properties that meet your personal expectations, your budgets, the area you would like to invest in. And you, by clicking on the real estate, you will find all the information on the real estate you need to make an investment decision. So we gather all the information we have of the real estate in one place, from photos, plans, the size of the real estate, of course, the quality of the real estate, the area where the real estate is located in. Energy certificates are also in the app, a land register excerpt, any kind of contracts we have, any kind of calculation, finances of the real estate, rental tenancies. So we put really nearly all the information in our app. And when you have decided to make an investment into the app, into the real estate, it's actually as simple as online shopping. That's what we wanted to build up. So you type in the number of shares, which is actually tokens you would like to buy. have to accept the contracts and the documents, then a two-factor authentication, which is actually the wallet app is going to open. You choose the payment method, and that's it. So the real estate purchase or the purchase of the real estate token has happened. So after that, what's going to happen after that? Then every month, our customers get their rental income in euros, of course, on their payment account paid out as it comes in. And the second point is that whenever you would like to sell the real estate token, you're also allowed and able to sell the real estate token. So you are going to choose the price by yourself, which means that you're also able to profit and benefit from the increase of the value of the real estate. The process is as simple as buying the real estate shares. So I'm not going to show it again, but actually it works in seconds to go through this process. Our business model is pretty simple. We charge 1.5% of the trading volume, so which means 1.5% of the buying trading volume and also the selling trading volume, and that's it. How comes the real estate on our platform? And when thinking of the presentation of Professor Sandner, he has had a slide with the name tokenization, the tokenization cycle. Actually, that's pretty much of the same slide, but in other words, we put the real estate into an SPV. That's what Professor Sandner mentioned. Again, then we do a due diligence, of course, of the real estate. There a due diligence of the SPV is going to happen. Then we put the real estate on the marketplace. Investors are then able to buy the digital real estate shares, which are the tokens actually. And when the real estate is fully funded, the investors' money flows to the SPV, and as soon as the purchase price has been reached, as I said, the transaction, which is actually a normal traditional real estate transaction, is processed in over escrow, and that's I would say very unique. So we use a law from 1874, which is in German the Teilschuldverschreibungskuratorengesetz, kurz, so in short terms, Kuratorengesetz, to put the token into the land register in form of a mortgage. So in other words, we have sort of a land register securitization. After that, trading is possible. So we've also implemented a secondary market. So as soon as you would like to sell your real estate token on the platform, you can do that in the way as I mentioned before. So in the end, what are you going to buy? Just to refer once again to the presentation of Professor Sandner, tokenization at Brickwise means actually securitization of the economic ownership of the real estate. So we put the real estate into the SPV. We then issue a participation right. In German, it's a Genussschein, which is equity based and has equity character, and then tokenize actually the security, but not the real estate. So just to be clear on that, we put the real estate into an SPV. The SPV issues security, which is tokenized on the blockchain. Actually, that's it. I'm at the end of my presentation. I'm happy to answer you, answer any questions.
So go on. Okay.
So yeah, thank you, Michael, for the additional insights on tokenization of real estate. We have a question on the start. Where is that? Ed, which one do you mean?
Maybe.
Well, can you dive into what really happens with physical assets? An example, if I make my house as a token, I sold this token, someone buys it. I think there is probably a lot already covered in your presentation. So if I just recap, so if I invest on Brickwise, I own shares, basically GmbH shares, or
No,
Or-
as I said, it's a participation. As I said, it's a participation right. In German language, it's Genussschein, which is tokenized. To answer the question, was what is happening with the real estate when you tokenize it? You have to distinguish between the economic perspective and the legal perspective. From the economic perspective, you put the whole economic ownership into the token, which investors are able to invest in. And on the other hand, the legal perspective, the legal ownership of the real estate does not change because the real estate is going to tokenize. So when you have a look in the land register, there is an SPV being the legal owner of the real estate.
Okay,
but since being in the land register is such an important topic, we decided to put the token, or actually the security, into the land register in form of a mortgage.
So by this, basically, it will once bought and stays on the platform. It will never change any ownership in the land registry.
That's very correct. Yeah.
So the taxman will not love it, right?
I'm sorry?
The tax authorities will not love it when they realize it.
We'll see.
Okay, no, interesting.
The next question from Bernhard Gotthard, on which blockchain are the tokens issued?
The blockchain is named Brick Protocol. The basis of the blockchain is the Waves platform, and we just developed we use the Waves platform to develop our own blockchain, which is a public but permissioned blockchain.
Mm-hmm. And another question is where I can buy the tokens or trade it.
I'm sorry, I didn't get the question.
Where I can buy the tokens or trade it from.
You actually, of course, you can buy it in the Brickwise app, but you're also able to sell and buy the token directly between the wallet holders. There's just one thing: the wallets has to be whitelisted on our site, which actually means that we have to know the owner of the wallet, so they have to go through a KYC process.
Okay.
But actually, you don't need Brickwise to trade the tokens, but the wallets has to be whitelisted on our site.
So how is then the price of the entire real estate explored?
Actually, it's pretty simple. When the real estate has a value of, let's say, 100,000 euros, before it comes on the platform, there are transaction costs, one time, of course, like taxes, like lawyer costs, and so on, which is approximately 10%. Then we put it on the platform for 100,000 euros plus 10%, which is 110,000, and that's the issuing price of the real estate. And afterwards, it's like it works like a market with supply and demand.
Okay, that's and do you have already any experience? What is basically the extrapolated, let's say, real estate price based on the last token sale, and, for example, the same real estate on the open real estate market?
That's very hard to answer. In general, we just to mention that one time, we don't make any promises on returns on the platform. So what we show to the users is a rental income return forecast based on the rental contract we have for the real estate, and of course based on the issuing or selling price on the market. So that's actually the only number we show. The development of the value of the real estate is really totally free and subject to supply and demand. What we have seen in the last month, we are live now for 6 months, is value increases up to 30% of the real estate on the platform.
Okay, good. One more question. See who is managing the SPV, and maybe I add on. So you are the 100% owner then, or is it a custodian, or who is it?
Actually, the SPV is the owner of the real estate. We started with our own SPVs, but there will be real estate on the platform pretty soon, with issued by third parties, I would say. Let's call it like that. And to answer the first question, who is servicing or asset managing the SPVs? Actually, we have a service company doing that at the moment, but actually, yeah, there are enough companies on the market doing the service. Actually, it's pretty simple asset management of real estate, which is very traditional, nothing new. But we provide the service for our investors and customers.
Okay, thank you. Another question from Pat CB. What is the blockchain protocol Brickwise is built on? And was the risk of a potential hard fork taken into account at protocol selection level? And if the blockchain selected for the infrastructure is prone of forking, how do you deal with two ownership rights for the same real estate property in case of such an event?
As I said before, the basis for the blockchain is the Waves platform. We have then developed the Waves platform and built somehow our own blockchain, and we named it a Brick protocol. As I said before, it's a public but permissioned blockchain. We allow any investors and any SPV holders to have a node of the blockchain. So actually, potential of, I don't see any potential of hard forks and so on.
Okay.
Okay. Yeah, cool. Then, yeah, thanks, Michael. Anyhow, we see each other then later in the panel discussion. We can dive deeper. Yeah, thanks a lot. And with this, we then continue to our last presentation. Yeah, we now will have a look on the investor perspective. Astrid Woollard is general partner of SMAPE Capital. Astrid has a very profound and many years of experience in venture capital. Before in, well, nowadays we would say Web2 startups, but also now in the Web3 crypto industry. Prior to co-founding SMAPE, Astrid was also associated at Skytail Ventures, and prior to that at EastCube, an Austrian startup incubator. Well, probably one of the areas that certainly crypto lacks and needs big improvement is gender diversity. So because women are strongly needed, in my opinion, in this industry. So for this reason, we are even more delighted to have you here today, Astrid. We look forward to hear now some aspects and views from investor side.
Great, thank you very much. I'll just share my screen in a moment. So there you go. So first of all, it's very important to say that whatever will be said today should not be taken as any kind of investment advice or financial advice or any kind of, advice to buying any tokens or any other assets. So basically, I want to just give a glimpse on tokenized economies and how our investors' perspective works on it, or how we also view the whole Web3 space in general. So in total, if you think about our investment narrative, we've seen 2020 as having been the year of decentralized finance, where it really came up and sort of became a huge hype, where a lot of retail investors then also entered this market. We've also seen adoption in the institutional space, where MicroStrategy up until today has been very vocal about it, also Square and many other companies. During 2021, we saw then the rise really of the non-fungible tokens, mostly or most prominently, people were hearing about it in the arts and collectibles market, but there have been many applications beyond that, like also in digital fashion and sports. For example, you have this kind of NBA fan cards. And I think that innovation in the NFT space is yet to sort of further develop. So we've had these first use cases, but I think that there is much more to it than what we've seen now, really. Then what we also saw during last year and already this year is that these decentralized autonomous organizations have been still on the rise, as being sort of the next kind of hype. And it's been moving away from having also just dedicated DAOs to actually being part of any protocol, really. So these days, you can see that any protocol, either maybe DeFi or again, any kind of these NFT platform or other kind of applications are actually trying to DAOify themselves. Having said that, there are not many good models really to incentivize governance these days still. So if you look at really voter turnout in these DAOs, it's still in the very low single-digit numbers, and this is something that needs to be addressed also in the future to make this work. And what we see for the future going forward is really that also sort of novel infrastructure solutions need to be presented. So what we've seen up until today are already very good layer 1 and layer 0s. But we really need also other approaches that will go and look after more interoperability and scalability, maybe also through layer 2 innovations. But we've seen that any kind of infrastructure that you see today, it's still not quite there yet that you can say that this will be ready for mass adoption. We can also see many sector-specific applications like in the IoT space or healthcare space. There are also some novel token use cases like these soul-bound tokens that have come up recently, where it's basically a non-transferable NFT. So it's sort of like a badge of honor that someone could have displayed, and they are not meant to be sold. And we also believe that there will be many other kind of use cases for tokens yet, and basically also beyond tokens, one can say. So then, yeah, so basically our personal investment focus, every fund has different kind of focus or sweet spots that they're looking for. So we're first and foremost infrastructure agnostic. So as I said before, we believe this on the one hand, there's not just one chain to rule them all. It will be a collaboration between many chains, and each of them will have the sort of prime use case. And then it's more about the interoperability between those. Also, the kind of interoperability protocols that we have today are already a very good start, but they're far away from offering true interoperability between all this kind of infrastructure. So they're still sort of interoperable, but within their own kind of ecosystem, within their own kind of sphere. And that's still far away from the whole Web3 vision that we would like to see, that we can really say like, okay, now we have a truly decentralized economy or economies collaborating with each other. So on the infrastructure level, there's still a lot that needs to be done. Where there are a lot of really interesting investment opportunities, again, for being so early on in the technology. Then in decentralized finance, we believe there are also still some interesting innovations that can happen. I mean, at the moment, to be honest, there are a lot of copycats out there from existing infrastructures. So it really takes a lot of like detective work to find the few that offer real innovation, and where you can say like, okay, these will be maybe the next interesting applications where also more adoption will come more broadly. Then also in NFT-based decentralized applications, we feel it's sort of this kind of whole topic of proof of ownership, or also creator monetization is a big topic. Gaming has certainly been a huge topic of last year and this year. But having said that, these are still very early stage games. So it's not like a AAA kind of title that you can see, because these are also capital intensive. They take a long time and actually need a whole kind of different network around it to work. Then I mentioned DAOs before, so there are many different kind of specific DAOs that you can have for each sector, but also just on a level of being sort of incorporated in a kind of infrastructural protocol is also something that we feel is very interesting. Then also data and AI obviously is a very interesting intersection with blockchain. where you can also sort of incentivize different stakeholders in an ecosystem. That could be, again, either, for example, in automotive, in the IoT sector, where you can also share data, for example, from your vehicle, or make that accessible to others. Also in the healthcare sector, one can see that there are more and more applications actually coming online now that have also completed first proof of concept. So they're also happening in the real world, which is nice to see. And what we're also quite proud of in SMAPE is basically our own trend analysis. On the one hand, we get obviously, a lot of feedback from our social networks. So we've all been in this space for many years. I myself have been following the space for about 10 years. And I think everyone else is also at least like 6 years, 7 years in this space. So we've seen a lot and have a good network. But we also have sort of an in-house crawling tool that also helps us to get more sort of technical data into our system, where we basically look also in different kind of social media sentiment analysis. We grow also like media articles, hackathons, or whatever. And this is also something that helps us to pick up new trends early on, because obviously for investing, it's always quite interesting to be there for the first platforms or the earliest platforms that actually go into a new sector. In terms of our criteria, what we look at, I think this is quite similar to what you would expect in a normal VC, save that we are very strong also in token design, obviously. So being in this Web3 and crypto space, it is very important to us to see that a token can accrue value from usage. And this is also something that you can already follow sort of the early kind of models that you had, maybe Bitcoin, Ethereum, or whatever. And no matter how high the usage is of these kind of protocols, it doesn't really reflect on the token price, because that wasn't really properly designed into these kind of ecosystems. And this is something that you can already see in newer models going forward, that people really now take an effort, say like, okay, now we know sort of how the infrastructures work, and can now focus on really looking at token design, how the token utility is structured, that value would really accrue to that, and it's beyond a speculative asset or something where only the market gives a price, so to say. So taken just as an example, maybe last year, for example, these were sort of the dominant sectors that you could see. And from that, I will actually pick out just the NFT sector, because I think also that most people have heard this term by now, or have sort of heard some usage that is more, let's say, native to them than if I just start talking now about the infrastructure parts of the blockchain. So you can see really NFT was a major sector during last year. And within that NFT sector, you get actually a lot of other subcategories where this has been used. And even though most people will have heard, as I said, from this arts and collectibles market, actually the predominant sector there was gaming. And there's actually a really good use case also for gaming, because it opens up new business models that you might not have had the chance to do before. For example, if there is an item that you just need to, I don't know, overcome one opponent, and then never need it in a game anymore, you could then start with NFTs. You can link that item to that NFT and then lend it out to people. So maybe have another business model of that, so that not everyone really needs to pay, I don't know, how much money to get that one item, but can actually get it quite cheaply just for this one part in the game. So you can really see that, again, this offers interesting new business models there. Apart from that, we could see that actually NFTs have gotten attention of major companies already early on. So I think Nike was one of the first that in 2019 already patented a use case of NFTs for the crypto kicks. And from that on, we could see really again throughout last year how games developed, like Axie Infinity was all over the place, Decentraland, where you can also sort of have your own kind of land and sort of build stuff on it. Then we had also in the digital fashion space, we had a lot of designers coming on that would also really link now their digital fashion to NFT. So actually the digital fashion space has already been there for quite a number of years, but now it's really entered sort of a new kind of, again, business model through the use of NFTs. We can also see that a lot of companies have now started building their own kind of stores, like Nike has, for example, did, but there are many all over the place, to be honest, where they have created sort of their own kind of metaverses or virtual worlds where you could enter, sort of try on different kind of fashion items and then decide to buy it. And initially people were always thinking that, oh, this is probably just to sort of another kind of layer of advertising when they started seeing brands getting into sort of games, for example, or the sort of kind of metaverse environments. But no, it was already a preparation for what was sort of happening during last year, that they were really opening up new business models, that they would not only sell sort of the physical items, but also the digital items, because this is something that we also believe will come online more and more, that we will enter these kind of metaverses or digital worlds, that, for example, you will also have a Zoom call, and we all know that you can change your background, but at some point people will just also wear, for example, digital clothing for that, and not bother otherwise they will have in the real world. So there's a huge opportunity for that. Obviously, we always need to keep in mind that if we speak about the metaverse, that as far as we can tell, the metaverse itself is still quite far away in development, not just from a Web3 perspective, but also from a sort of AR, VR perspective, that the technology might not just be there yet, that we can say like, okay, now we can have real functional metaverse where we also put our, I don't know, AR glasses on, which still are not quite on a price level that everyone can afford, I would say. But sort of, it's all going into that direction, let's say that way. We could also see that this whole NFT space really created some interesting new legal issues as well. So first of all, one has to think about, okay, are you owning really an intellectual property rights with it? Does it give you any rights really? Maybe there is some copyright, but otherwise, what are you really getting into it? On the other hand, and for example, there's the problem with the royalties, that yes, as long as you are staying within one platform, then the creator can theoretically be paid some kind of royalties. But coming back to the whole Web3 interoperability issue, as soon as you move that NFT to a different platform, that functionality is lost. So it's not really, let's say, for infrastructure-wise well developed yet, that we can really use this as a proper IP rights system, but getting there. I mean, it's also posing interesting questions, because what you've seen with software these days is that actually you don't own a software, you only own a license to software. And with NFTs, you could theoretically actually really now also own digital items. And this is a sort of a legal case that hasn't been there before. So we already need sort of new legal frameworks. And how do you then go about used digital items, and what are they worth, and what are you actually transferring? So this is certainly a very interesting time to be a lawyer. Also, taxation-wise, it's something that isn't quite clear yet in many jurisdictions. So if you also go from crypto to fiat and back and forth, or even if you have an NFT and everything is just priced in fiat, and if there is sort of increase in price, then you will be also charged extra taxation in some jurisdictions. So it's always worth checking with your tax lawyer on that, if you're in this business of really buying and selling NFTs, or also lending them out and all that kind of stuff. And obviously, also on the infrastructure level, still a lot of questions that need to be addressed, and how these can actually work out. There are also some infrastructures that don't have really proper NFT standards, or lending them out basically from other infrastructures, and we'll see how that will then also sort of develop over time. So that kind of space. So thank you for your attention. Please always feel free, to reach out to us via email or through a website or any kind of other social media channel. We're always happy to also bounce off ideas with people, or just in general talk about the whole Web3 space. And happy to take any questions now.
Yeah, thank you, Astrid. We would jump right into the panel discussion and keep the questions on the venture part, because we'll for sure also in the panel discussion come back to it, because we are a bit short of time. So with this, we will
proper NFT standards, or lending them out basically from other infrastructure. That sounded like a recording.
Sorry?
That sounded now like a recording or a feedback.
It was your callback. It was a really perfect pitch.
Okay. No,
thank you, Astrid. So the next one is Jakob Steinschaden.
Exactly. With this, we would jump right into the panel discussion, and we will welcome two more panelists. Jakob Steinschaden from Trending Topics will lead the roundtable now. Jakob, the stage is yours.
Absolutely. Thanks a lot, guys. I just jumped into the call. So we will have the panel discussion now, and we just heard Astrid Woollard from SMAPE Capital. She just pitched her thing, and you already heard Michael Murg from Brickwise, and we have two new panelists here. The first is Cedric Heidt. He's from the Frankfurt School Blockchain Center and from the Blockchain Founders Group. Welcome.
Good to be here. Thanks for having me, guys.
Hi, nice to meet you. And the second one is Zoltan Fazekas. He works for the NFT startup loob.io from Vienna, and also for the FH Technikum. Welcome.
Thanks for having me.
Yeah, so thanks for having me. So I'm Jakob Steinschaden from Trending Topics. We are kind of like the tech crunch of Austria, and we cover a lot of topics about crypto and NFTs, which is very interesting for us. And I would like to start with Cedric and talk a bit about, of course, tokenization. And what would you say is tokenizations also, when you look at the market right now, does it take the industry a step forward or backward?
That's a very good question. I think tokenization right now is something that is talked about a lot, because it can really do a lot of things, not just for the various industries that have the ability to suddenly tokenize their assets and have whole new fundraising opportunities, but also for retail investors who now have the possibility to invest directly into industrial machines, and in that way can really diversify their portfolios. And so I think it really brings a lot of industries forward, not just the crypto industry or, let's say, the agricultural industry. It really brings everything forward. But what it really depends on ultimately is how it's done. And that is still where we have a lot of questions. I know I'm not a legal expert, but I think we have some here. And that's where, we get into the details, and that's where it gets really interesting.
Absolutely. Thanks a lot. Second question for Zoltan. I would be really interested. So since you're like on the development side of things, since the launch of Ethereum as a leading tokenization platform, a lot of new technologies have emerged. We have Cardano, we have Solana, so on and so on, Polkadot, of course. What would you say, what are the major differences to Ethereum, and what are the pros and cons?
Yeah, Jakob, first let me answer the question why so many of them exist and new ones are coming out. The main driver, the main motivation of all of them is scalability. So of course, they need to have security. Decentralization is a must, but then what Ethereum lacks, Bitcoin of course even more, is scalability, more transactions per second. And basically you can divide them into two categories. The first category, called layer one, or build their own blockchain by tweaking their protocol. Just to mention two approaches. One is to use sharding, where you subdivide the nodes which are creating the blocks into groups, and these nodes only need to process a subset of the transactions, so they can work in parallel, and by this process a multitude of transactions compared to a non-sharded blockchain. The other approach is to come out with novel consensus, like you mentioned Solana, for example, with their proof of history, which is more or less a verifiable delay function where the nodes take turns and they again wait for some time, a provable amount of time. So this is also a approach to solve the scalability problem on layer one. And by the way, these layer one blockchains are called sometimes aggressively Ethereum killers. I don't know why everyone wants to kill Ethereum, but there are quite a lot of them. And then there is this second category, which does not want to get rid of Ethereum. They rather dock onto Ethereum. They are called layer two approaches, and they inherit the security of Ethereum, or could also be some other layer one blockchain. Two of the most promising flavors, I would say, or approaches are rollups, the optimistic ones, and the ZK rollups. The optimistic ones use the layer one blockchain Ethereum for storing their transactions, but not executing them. And as the name says, they are optimistic. So as long as nothing goes wrong, they keep doing this, kind of pushing or storing their transactions on layer one in a smart contract. But whenever they see some fraud, they submit a fraud proof and kind of point to the transaction which is not valid, and discard all the other blocks afterwards. And then we have the kind of the holy grail, the ZK rollups, which compress all of their transactions off-chain into a zero-knowledge proof, send this zero-knowledge proof to the layer one chain, and all of the transactions compressed this way into a snark or start proof get validated immediately.
The Ethereum guys, they said they will switch to proof of stake, I think, in August. So the question also would be, there might be no Ethereum killers, but will Ethereum kill the other proof of stake networks? What do you think?
I think there will be a competition. By the way, Ethereum 2 is a combination of layer one, a new layer one, a sharded layer one, plus layer two solutions. So if you follow Vitalik or other opinion leaders, they see a combination of both. And this will create a, I don't know, completely different order of magnitudes. Only with rollups or only with shards, we would maybe win 100 times more transactions. But if we combine both, then we will arrive where we want to arrive, where also the others want to arrive. But I'm seeing the competition, and competition is good. So it's why not? And new approaches is also something we can learn from. So I rather see a coexistence, bridges which allow interoperability of several blockchains. This is how I see the future.
Okay, Zoltan, thanks a lot. So I would like to jump to Astrid. We just heard your presentation. And so looking at the market right now, of course, we've seen in 2021 a big hype. Now in 2022, things look different from an investor's perspective. How do you look at things? How will DeFi, how will NFT space go on? And do you think now there's like the so-called crypto winter, and yeah, we will have to wait another 2 to 3 years to have another hype? What do you think?
Well, I think that the current market is a little bit different because it's not just driven by, crypto events as such. It's been Terra Luna just recently, but otherwise I feel that it's been mostly about political or geopolitical events that happened during the last few months that really drove this, because you can not only see that crypto is suffering, but just global markets at large. Have dropped quite significantly, and in general, we as investors don't see this negative. That means that there's a new consolidation in the market, that really the sort of low quality projects will finally leave the space and give way to new innovation. People will now also focus more on building new products, building new approaches. Also in terms for the fund, it's really great because we get more time on due diligence. Just to give a flavor to people, last year, for example, when during hype stage, we sometimes just had a few days up to maximum a week if we were lucky to conclude all due diligence on projects and really get an investment decision done. Also on very high valuations. Now we're in a much better position that we can take a few weeks for due diligence and really have more opportunities also in parallel that we can compare. You can also see that valuations are going down. Also in general, I think all crypto investors are still very bullish on this space, because otherwise there's no reason really to panic at the moment. Adoption is going on quite nicely. You can also see that institutional players are getting more and more into this market. So for us, it's just a perfect opportunity to actually now invest into this space at lower valuations than we would have had last year. So meaning that in a few years then, when we would be divesting the fund, that we get a better performance even still there.
You just mentioned it, that the valuations are dropping. Is this a good time for an investor, because like tokens will get cheaper? Is this the time for you to grab a lot of them?
Absolutely. I mean, it was our thesis all the way along through last year, that we said like we would expect that sort of end of last year, beginning of this year, also that the markets will drop at some point, because you cannot sustain sort of this kind of hype cycle forever. That it was also a perfect time to really go out, also fundraise for the fund, so that we would have then capital ready to deploy once this happens, what is happening just now. So it's actually a perfect time for us. Yeah.
Okay, thanks, Astrid. I would like to jump to Michael Murg. I think like it's 2 or 3 weeks ago, we had a podcast together about Brickwise. What's your look at the situation right now as a startup? Of course, you are dependent on the broader economic scene. How do you look at things, and what do you think, how will things evolve in the next months and years?
Yeah, well, the macroeconomic situation could be better, of course, as we all know. But for us, at the moment, it doesn't make any big difference. We're still on the grow market. We're super new. We try to inform the market about us. We try to inform our investors. We do a lot of advertising, of course. Still, we are growing. I would say really a lot each month. We are celebrating the 10,000th customer on our platform right after 6 months. We're super happy and proud about it. Our shareholders and investors are totally believing in our vision. So actually, macroeconomic situation doesn't affecting us a lot at the moment.
Okay, so that basically means that the space you are in, like in real estate tokenization, it will keep on growing. Can you give us an look into the business in, let's say, Middle Europe? So there's a few other companies. What do you think? How will things evolve in this space?
I mean, the real estate market is also a market where we have to have a look at the moment, or focusing at the moment, pretty strong, because interest rates are going to rise. So we will see what happens on the real estate market. There are actually 2 totally different players on the market. Like one is equity based and the others are more debt based. So I'm seeing some risk on the debt side, because when interest rates are rising, I'm not sure if all of them will be able to pay back the debt, or even pay the rates. So we need to take care and be aware of what's happening there. For us as a platform offering equity-based tokenization, I think it's not going to affecting us a lot, and also not our investors and the real estate valuation on the platform. What we see at the moment in general is that there are a lot of local players in different countries, from Czech Republic, for example, also in Germany, in France, are coming up with sort of similar but different models. And I'm super excited, actually, and very, very interested. How are they going to communicate their business models to the retail customers? That's actually, in the end, the most important thing to be successful.
Broad overview on the evolvement in the tokenization space. So we just heard about tokenization of real estate. Of course, there's tokenization of art, NFTs. Of course, there's kind of like at least what I think, like a new breed of tokens that try to tokenize gold. So what major trends do you see in this space, and what might be hype, and what is like a more sustainable development from your point of view?
Yeah, I would like to refer to Astrid's presentation before. She was making a very, very good point from my perspective. She said that NFTs and tokenization is a big topic, also for royalties and rights and licenses and so on. I see that could be a very, very sustainable business field. I also see that in real estate tokenization, because when you connect the token to real estate, when you have a very secure and safe transaction of the token on the blockchain, it doesn't affect anyhow the real estate itself, because it's not mobile. You're not able to steal real estate. It will always be there and always in place. I see a little bit of a hype in tokenization of any other goods, I would say. Like, it doesn't matter if it's gold or a car or even art, because from my perspective, it doesn't make really sense to have a very, very safe and secure token in my wallet. But I actually do not know if the car, which has been tokenized, if still there where it should be, or if the gold is there where it should be, or even the art is in the museum where it should hang. So I don't see the really good connection between tokenization and mobile goods.
Cedric, what do you think?
Yeah, I totally agree. I think it's very interesting. But at this point, I actually have a question for Michael here. Because I think real estate, while it's one of the most valuable things to tokenize, I think it's also one of the most complicated, because you as a landlord or as a Verwalter of the property, you have certain responsibilities, right? You have to make sure you find tenants and the house isn't empty to continue making rent. If something breaks, you need to repair it. So if the house is owned by a special purpose vehicle, who actually performs these repairs and who pays for them?
Actually, we've installed a service provider for management of the properties, which is like a simple asset management, as you can observe it already on the market since decades, I would say. A second thing is who is going to pay for any installed like repairments and so on. And what we are doing is we're building some sort of liquidity reserve when the tokenization is going to happen, and all the repairments are paid from this liquidity reserve. And of course, we put also money into the liquidity reserve from the rental income. So that's how it can work.
Okay, very interesting. Yeah, Jacob, back to your question. Sorry, I got a little sidetracked. I was very interested in hearing that. As Philipp said earlier, over the long run, I think really a lot of things, or almost everything, will be tokenized. I think art may or may not be overhyped. Who are we to say? Gold could be great because we can back new tokens by it. But what is really interesting is going to be the security tokens, the tokenized companies, the on-chain organizations that generate profit, and then offer that as dividends directly to your crypto wallet, ideally without the use of special purpose vehicles, but like an on-chain enterprise. I mean, Astrid talked earlier about decentralized autonomous organizations. And I think that's really a very interesting thing to go. That is a little bit underrepresented and not really hype, because we're seeing a whole ecosystem evolve of startups that launch as DAOs, venture capital DAOs that fund them, DAOs which are collectives of developers which then work for the startups. And really this ecosystem and owning part of that and getting part of the revenue, I think is going to be one of the most interesting aspects of tokenization.
Absolutely. I think DAOs it's a very interesting concept. On the one hand, of course, it should be decentralized. On the other hand, you of course have a lot of VCs that want to invest into space. What do you think? What should be the role of VCs? Because of course, guys like Andreessen Horowitz have been criticized a lot in like buying a lot of tokens. Some people say that then it's not decentralized anymore. What do you think? Should DAOs like stay away from the VCs?
Well, I think a lot of this criticism comes from DAOs purchasing tokens pre-launch before they're traded on a market, where they get rates that are very different from what an investor pays for on the open market. I think in the future, it's going to be more that DAOs are going to be in a position of power, and venture capital funds need to fight over them to an extent. And maybe my tip to venture capital funds would be get some Ethereum ready, because the DAOs can't take fiat anymore.
All right, great. I also would like to talk a bit about the NFT space. Like from my point of view, I think the NFT drop of the other side of Yuga Labs was quite interesting. I think it was like the biggest NFT drop this year or even in history. But on the other hand, the gamer community tells me that they hate these NFTs, and actually nobody really has seen the other side, like this 3D world that was promised to us. So Zoltan, you are in the NFT business. What's your take on the other side? Is it like a big step forward, or do they just have to show what you really got?
I mean, for Yuga Labs, it's for sure the next step forward to build out their community. By the way, it was really interesting. I found it today. You could buy a Bored Ape for less than 100 ETH recently. So the price dropped quite a lot of this kind of top NFT. Yeah, Ed is liking it. I hope you bought one or two. Yeah, so
I didn't buy any one, but
yeah,
please go on.
Neither me. I agree. I remember in the presentation of Astrid, she told, yeah, the metaverse as it was envisioned is still far away. I also see it a bit further away, but at some time we might arrive in this more immersive digital world, which is not only about gaming, I don't know, shooting or fighting or whatsoever. It will be also kind of serious life working, for example, meeting people, buying stuff in such a digital world. And I see there, for example, the use case for digital twins. So things I buy in real life, I get a representation of as an NFT in this digital world. And maybe it will be even more important to own it and to show it in this digital context as in the real world where we are sitting in, or sat at least the last 2 weeks or years, I mean, in lockdowns at home, and it was not that important what we wear, but in the metaverse and digital worlds, our avatars will wear wearables and jewelry and whatsoever that will have kind of a real value and meaning.
Yeah. The question is also if there really needs to be like this 3D metaverse of the other side, or if it just needs to stay well-designed NFTs that are tradable. Cedric, what do you think about the other side? Will it really be a metaverse, a 3D world where we will jump in, or will it stay like a tradable NFT that might be a bit superior to others?
Yeah, that's actually a really interesting question. That's something I've been thinking about a lot recently. I heard somebody say that humans have a hard time understanding innovation because we think linear and not exponential, so we can't really understand what is going to happen. So what I'm about to say might be totally wrong, but I just can't imagine a world where the average family father is going to strap on a VR headset in the living room while the kids run around, you know? Most people don't really have the time for such an immersive world. And I think a lot of it is going to stay in 2D. I say AR is already here in our average life, in our daily life. It's called our smartphone. You pull out of your pocket, you navigate. And I think that is what the metaverse is going to go towards.
Okay. I also would like to hear from Astrid. What's your point of view on the role of VCs in this space? So we've seen Andreessen Horowitz, for example, investing a lot of money into Yuga Labs, into the other side. Is that a bit too much, or is it the necessary part of business to have these big investors going into the space?
I mean, what we always also recommend to any project that we're talking to is to make sure that you only get investors on board that actually have a certain value add that can be useful for your own business and just provide more than beyond the big name. Because actually most of these big investors, as I said, either have huge allocations, so they will take a lot from sort of the token cap table, you can say. And this brings already some risks to the project itself. So we've seen some projects where they had sort of like 10% even of their token allocation given to one single investor. And this is usually something where we walk away from because we say like, well, there is no point really, because there's a huge risk that if they feel sort of selling pressure, then it will drive down the price and game over for everyone. And also we actually even advise projects that they should put it in their legal agreements these days that also if an investor exits via the token holdings, that this is done in a professional manner, where with, you know, market makers, brokers, and whatever, that will not drive down the price, but in a way that will not hurt the project. So I think there's also something in the hands of the project that they need to sort of be educated more on and really grow up in sort of what you can also demand from an investor. So I think investors can be very good and very helpful also from a networking perspective, but one should choose very wisely who you're getting on board and how you really structure the whole tokenomics around that.
Absolutely, absolutely. What do you think? I think like just last week, Andreessen Horowitz introduced a new crypto fund. It's $4.5 billion that will be like pumped into the market in the next months and years. And of course, they mentioned a lot of buzzwords like DeFi, metaverse, so on, so on. What do you think? What will investors look for in the next months and years to invest? Will it also be like real estate, tokenization of real estate?
Maybe. Yeah, I mean, I think that tokenization of various assets is really interesting, but I think there's still a lot of supporting infrastructure that is required to make it really work, like the connection to the real world, like the oracles, any kind of insurance. I mean, like Michael said before, you know, with real estate, it is a little bit easier because the thing sort of stands where it is, you know, and it can't move away. But what is with moving, parts, and how do you actually assess it? So you again need the oracles, and actually no oracle today is really that perfect. And they can also be easily attacked. So also if you have any kind of blockchain system, then you would also like to see more than maybe one oracle, which is just Chainlink, and see like, okay, how can you actually sort of mitigate your risk around having several oracle solutions built in there? Again, then the whole insurance factor, how do you cover for losses that are happening and all that? So we also actually looked at tokenizing our fund, for example, during our fundraise, but we quickly actually realized that it's not really reflected in the register. So it's basically, yeah, you can sort of shuffle tokens around and there might be something attached to it, but it's not really reflected in the real world yet. So we decided to step away from this. So like, okay, even though it would have sounded really great for a crypto fund to be doing that, we said like the sort of whole the legal and the whole real world sort of space around this is just not there yet. So it doesn't really make sense to go that way. Yeah.
Okay, thanks. I think one very important topic still is some called it the Lehman Brothers moment of crypto. Just a few weeks ago when the Terra Luna UST blockchain stablecoin thing like crashed within a few days. Sultan, what do you think? Is it really like a Lehman Brothers moment that will have a deep impact in the crypto space, or will we just go on? It was, let's say, yeah, it was just a nice try, and other algorithmic stablecoins will come along the way.
If you are a bit longer in the space, then and you hear kind of crypto winter and crash, you ask yourself which one, the last one, which happened recently, or the one before, which was in 2018. I think these things are repeating. There is always some trigger, and I really believe in algorithmic stablecoins. I was maybe a bit technically biased, but a fan of DAI, for example, and less a fan of Tether, for example, which is again and again kind of accused by not having the right collateral on bank accounts for their stablecoin. But it might be a little bit my technical heart.
Okay, Cedric, I would be interested. What do you think? Have you been shocked when you saw UST Luna crashing, or haven't you been that surprised because it might be some people have foreseen it? I think you can watch some YouTube videos from February, March that basically said that this will happen sooner than later.
Yeah, I think I really wasn't too surprised. I mean, I never really got into Luna that deep to understand really the risk, but just the way that it grew for an algorithmic stablecoin, I said, no, that is very shady, because typically organic growth, especially of algorithmic stablecoins, is very slow, and it's a very tedious process of building that trust. And Luna kind of took a shortcut by offering unsustainable interest rates, I think 20, 30, 40% on Anchor. And you got to ask yourself, where is that coming from? Is that money being lent out? Is that coming from a pool that is funded by the developers? And if so, what happens when that runs out? And so I wasn't really that shocked, but I was in the crypto market when the Mt. Gox exit scam happened. And that was something where we all thought crypto is dead. That was like 2014. So compared to that, I really think that the Terra Luna thing is not too big of a deal. I mean, of course, I feel really bad for the investors that lost all their money, but I think crypto is going to move forward and be stronger for it.
Okay, and if you look at the TIFA or USDC, are these like the next ticking time bombs, or are they more stable?
I hope they're more stable. USDC is backed by a consortium of big names like Coinbase. Tether, yeah, we don't really know. That's still a big debate of what is going on there. I think really the one potential black swan event that could happen in this crypto cycle that would be a Mt. Gox level event is Coinbase going bankrupt. But I think the chances of that happening is extremely, extremely low. I mean, I don't know what's happening inside the firm, but we have no reason to believe that that might happen. And I think we're going to be okay, especially because the market capitalization of Tether is dropping and being replaced by USDC, which is a good move overall for this stability.
Absolutely. We can really see this shift from USDT to USDC. I think a lot of investors want to be on the USDC side and not on the USDT side. So I don't know how you feel, but like especially in the recent weeks when this crash of USDT happened, I think the divide between like the Bitcoin maximalists and the other crypto nerds it even grew broader. And I think the Bitcoiners, they really claim that the rest of the crypto market it sucks and like Bitcoin is the only real thing out there. What do you think what will happen in the next months and years? Now more and more startups, also in Austria, also in Switzerland, also in Germany, they say they want to build on the Bitcoin network and not on Ethereum or other networks. Do you think this is a real trend, or is it just like a phase after this crash?
I think that's a really good question. Full disclosure, my colleagues always say I'm an Ethereum maximalist, though I try not to be, but it's always easy for people to think in labels. And I think for a lot of the original Bitcoiners, it's easy to go into that confirmation bias of, I was right about Bitcoin, and there is Bitcoin, and then there's other. And then you just have that label. But I really think that each blockchain that comes out that is new, that has a different approach to the consensus mechanism, is different and deserves some a fair shot, though I know we don't really have the time to evaluate 1,000 new coins. But I do think that in the long run, we're going to have Bitcoin as a fundamental value layer, and then we'll have some other blockchains, maybe Ethereum, maybe some other smart contract platforms that act as an execution layer for different advanced financial activities. And then we'll have a whole infrastructure layer that'll be like tons of little projects like Chainlink, various stable coins, etc. But I don't really think the mentality of one coin to rule them all is correct, because we live in a multi-chain world.
Absolutely. Astrid, what do you think? Do you see more and more startups, more projects that want to build on the on the Bitcoin network rather than to use some of the other proof of stake networks?
I mean, there has always been quite some development on the Bitcoin network, and yes, there may be slightly more, but I wouldn't put it into a significant bucket yet. The problem still is with the Bitcoin network that it's quite limited in functionality over other infrastructures, so you won't be able to do as much as you could with other chains. And then, you have, if you want to do any kind of upgrades, you sort of have to go through the miners, and you have to question yourself, is this also really that decentralized that you're looking for? I mean, also like just we had the discussion before around the whole stable coins. I mean, USDC, for example, is while it's regulated, it's actually not decentralized at all. So this is something that one should always keep in mind if you actually have any holdings in USDC, that the creator could always think like, well, now no longer, right? So I think that there is also a case that again, also for stablecoins, you have a more decentralized system, and while Tether is not really perfect from how it's set up and all that, it is at least a decentralized version of that. But there you go.
Okay, Michael, what do you think as a startup founder? Would the Bitcoin network make any sense for you to build on, or did you ever think of it, or did you like just begin to build on? I think you are using the Waves blockchain.
No, actually, we were evaluating all the blockchain we saw on the market. Of course, we also thought of putting it on the Bitcoin blockchain and also on the Ethereum blockchain. But for us, the perspective was always a bit different. We use blockchain just as a technology and not more. So for us, it was important to think of, okay, we would like to make real estate investments easily accessible to everyone. And if people didn't have access to real estate for whatever reason, and it could be knowledge, it could be capital, it could be information, whatever, those people also are very likely not able to buy any sort of cryptocurrency beforehand, to buy any real estate afterwards. So that was one motivation for us to say, okay, no, it doesn't make any sense to put the real estate tokenization like we did it on at Brickwise on an existing cryptocurrency blockchain. And the second motivation was actually market risk. We don't want to have any market risk on the company side for us, so we want never be dependent on any blockchain to buy, I don't know, any ethers to make build up new tokens, and also not putting our users and investors on any market risks. Actually, those were the two main motivations for us to developing our own blockchain.
Okay, thanks a lot. Zoltan, what do you think? Would it really make sense to put NFTs on the Bitcoin network? I think there are some startups out there that want to do that or that do that, but like the majority of NFTs run on Ethereum. Might that switch to Bitcoin, or will it always stay on Ethereum?
Honestly, I might be a bit biased towards Ethereum or EVM blockchains, but it's so much easier. There are standards, for example, which ensure interoperability of wallets with block explorers and exchanges and DeFi protocols with all these tokens. So it's a really not a big deal to launch your NFT and mint and so on. You have all these kind of a little bit specialized infrastructure already there. Therefore, I don't think that the NFT space will move massively towards Bitcoin, but I'm already seeing my Bitcoin friends kind of disconnecting on social media, banning me from their friends.
Okay, let's hope that they will stay your friends and they are not too embarrassed. So I think we have 8 minutes left, so it's like 2 minutes for each of you. My last question would be, a lot of people now talk about next crypto winter is here. It will take 18 to 24 months to have another Bitcoin or another crypto hype. What's your point of view on that, and what's your prediction for the next year? What will we see in the crypto space? Let's start with Astrid, ladies first.
This is not financial advice. We're just starting off with that one, but yeah, just trying to look in a crystal ball. I mean, as I said before, I think that institutional adoption is still there. A lot of players are getting into this space. A lot of money is still being poured into from investors left, right, and center. So I'd be very surprised if we really have to sit this out for 2 years. See that it will pick up much earlier than that. Wouldn't make sense any otherwise. I mean, okay, minding that depending on what kind of other geopolitical events we'll still see in the next months or so. But I think from a just a crypto perspective, I would see that it's going up again.
Okay, thanks a lot. Michael, what do you think? Especially, of course, in real estate, what will we see?
I wanted to answer actually the same question, but in real estate, we will see a lot more of tokenization. Real estate market will get more volatile in the next month, I think. But in the end, since it's connected to a very, very basic need of all of us, just to have a living room, it will be more or less, and of course, compared to the cryptocurrency market, very, very stable.
Okay, and of course, the broader question about the crypto winter and how things will evolve in the next 18 to 24 months.
I'm thinking of playing Advocatus Diaboli in the discussion right now. From my perspective, and I really know that I'm not making myself popular when saying that, but I think there will not be a big change. Most, not all of them, a lot of cryptocurrencies, they will be 100% away from the inner value. They are that right now, and they will be the same 1 year in 1 year. But in the end, I'm totally with Astrid. Of course, I'm pretty sure that we'll see a strong comeback. It's just a matter of time.
Okay, thanks, Mikey. Cedric, what's your prediction for the next 18 to 24 months?
Also, my opinion, not financial advice. I like to think that we're not at the end of this bull market yet. I think this is a recovery, and we're yet to see the peak. That's my optimistic view. Realistically, I think that the peaks are getting higher and the values are getting less deep. That being said, I think the market is really overheated. We need a shakeout. We need to get rid of all the Dogecoins and the NFTs, because a lot of people who are not into crypto that you see on social media are developing a sort of a hatred towards NFTs. You saw this when Ubisoft announced NFTs in their game. People got like mad, and yeah, we really need to like calm down, and maybe right now not going to the moon is a good thing for a bit.
Okay, thanks, Cedric. And last but not least, Zoltan, what's your prediction? I think you might have another a bit different opinion about the future of NFTs.
Yeah, but in general, the whole crypto space, I remember, maybe you remember as well, the kind of optimistic predictions last autumn. Bitcoin will hit 100,000 and above, and 500,000 and whatsoever by end of the year, right? So in a few months, I don't really believe in such predictions, because even if it became real, it's not a healthy development. There is a bubble, there is nothing behind. I guess we will get back to the level where we already were, and from there we will develop further, I hope upwards, but it may take some time. So I hope until end of the year we are at the level where we were last year at that time, and then hopefully up.
Okay, awesome. Great, guys. Thanks a lot for having me today. I had a lot of fun with the discussion with you. And yeah, I would like to thank Cedric, Zoltan, Astrid, and Michael for having me and let us hear your view on NFTs, DeFi, stable coins, so on and so on. And yeah, thanks a lot. Unfortunately, I have to go back to my meeting now, and that's why I would like to hand over to Prinz, I think, and he will take on for the rest of the 30 minutes of the conference today. Thanks a lot.
Many thanks to you, Jakob. Glad you were here. At this point, we will take it from here, and we have some questions from the audience. And if you have some minutes, we can ask these questions. So we have some questions to Zoltan, Fazekas. What are NFTs technically, and the value behind non-fungibility, and how do NFTs work, the mechanics?
Okay, so a lot of questions. Let me start with what they are kind of technically, based on the EVM Ethereum-based blockchains, because in some other technologies, they are kind of native, hard-coded in the protocol, but on Ethereum, they are smart contracts. And there are different kinds of smart contracts. These are programs which exist in exact copy on all of the nodes. Programs consist of code and data, and they execute every operation, every transaction on all of the nodes. Now, NFTs are a special kind of these programs, which even have a standard, or there are multiple ones, but the most well-known is the ERC 721, which is a basic agreement on the absolutely mandatory functions which all of the wallets, exchanges, and so on and so forth expect from an NFT. And this function is to track the minted token IDs, so which unique tokens with a unique ID exist, who is the owner of them, then to allow the owner to transfer this ownership to someone else. And there is a bit more kind of special functions like appoint an operator. You as the owner can appoint an operator, some other user, to do those transfers on your behalf. So either for all of your tokens, or you can appoint an operator for a single token ID as well. And this very basic interface, it's just a bunch of functions need to be implemented by all NFTs, and then they can interoperate with off-chain tools and also with on-chain DeFi protocols.
Thank you. Please mute.
Yeah, one aspect that was already tackled by you is the topic. I mean, it's a great question actually to everybody. It's the question of the multi-chain or world or a world where one or two layer one blockchains will dominate. So if we take the analogy of, let's say, do we have a future of similar to a car industry where everybody has different needs to a car and different flavors and preferences, or will we have a future of, let's say, airplane industry with two players or operating systems with iOS and Android? What do you think, Astrid, airplane or car industry? Astrid just left. Yeah, Cedric, what's your take on that?
Can you say that last part again? There's a little bit of a...
Yeah, it's just a question, just analogy. Will we have a future layer one world where we have a lot of chains with, let's say, different preferences? It's just a question of your individual preferences and style and taste and needs, or will there be simply a network effect where we will have 1, 2, 3 dominant chains and everybody has to be there? What do you think?
So I think where we're going right now is we're going into an EVM dominant world. That's not to say Ethereum will be the main thing, but there's all these other chains that are compatible with Ethereum, which means you can use bridges, you can send tokens from one layer one to another. And then there's also all the layer twos that you can use. And I think that this collection of all these different Ethereum virtual machine compatible blockchains, those can really provide the scaling and the versatility that a lot of people are looking for. Additionally, when we see the Ethereum merge and the Ethereum 2.0 upgrade, assuming it succeeds, fingers crossed, I think that can really scale to process transactions for a lot of people. And if it does, and Ethereum fees go back under $1 or under 50 cents, I think we will be talking about Ethereum a lot more than we are now.
We can't hear you.
I think you're muted, Martin.
You're mute, Martin.
Sorry.
Ed muted me. Zoltan, Michael, what's your view on that? Do we will have a very dominant 1-2 players network effect, Ethereum, whoever, or will we have a multi-chain with space enough for a lot of different specialized layer one blockchains?
I absolutely agree with Cedric. You have to distinguish the network, a bunch of nodes with a consensus processing transactions, and the EVM, which became a de facto standard. So where many different new layer one blockchains are adapting the EVM, for example, and this was a huge progress actually, because it was not trivial, but even ZK rollups, which are not made for this generate computations, even a day like ZK Sync introduced EVM support. So I really believe that the Ethereum virtual machine is becoming kind of a standard on different blockchains, and if they get interconnected by bridges, and we can transfer funds, so assets, basically tokens, which is nothing else than freeze them here, mint them there, burn them there, and free them up in the other chain and use them further. Then this will connect these disconnected worlds, which they are kind of normally disconnected as islands, but there will be ways to travel between those islands.
Yeah, I totally agree. And I think bridges are really the missing piece of infrastructure because we have them, but the security and reliability is somewhat spotty. And the other thing that we need is we need liquidity for, let's say, Chelo tokens on Ethereum, like C Euro or something. Because right now you can't really do anything with it, even though you can bridge it over to another chain.
And Michael, you, what do you think?
Actually, everything said, I totally agree to Zoltan and Cedric. Nothing more to add.
Yeah,
Mute, please.
Sorry, too many computers. Maybe one last question to our listeners also. I mean, you're all entrepreneurs and a long time in this space. What do you recommend to people that are maybe working in a classical company or working in a Web2 startup, but want to transition into Web3? What kind of tips, recommendations do you give those people? Zoltan.
Try it out hands-on. So if you are kind of not a tech person, then try out a wallet, play around with tokens to get this experience, and I'm quite sure it will be very useful in the future. Also, kind of the responsive handling of private keys, for example. So taking care of your own private keys and taking this responsibility for yourself. The same goes for developers, for technical people. Hey, try it out. It's not rocket science, and the best experience is hands-on at this point.
Cool, thank you. Zoltan, Cedric, what do you recommend those guys?
Cool. I think the important thing to know about the Web3 space is that you might think because you can't develop or you don't have any hard skills, you can't really do anything of use. And I think that is totally not true. I think the only two skills you need in the Web3 space are persistence and critical thinking. You will find ways to apply your skill set. And if you join the relevant communities on Reddit, on Discord, and really get in touch with people, you'll find opportunities. There'll be hackathons where you can make a logo, help them come up with a name, whatever. Like it's very easy to get involved in Web3 based on what you already have. So don't be afraid, try it out.
Maybe you can just put a little bit of advertising for your DeFi talent. Maybe you can say a few words on that.
Exactly. Yeah. Additionally, the Frankfurt School of Finance and Management Blockchain Center, we're running a DeFi Talents program, which is a coaching and mentoring program that lasts I think 6 months. It's every 2 weeks. We do a Zoom call, very relaxed Monday evening. And you get to know other people that are looking to get into DeFi. We guide you through some assignments. You share them with each other. And it's a really cool opportunity. We've had some talents that graduated our program and are now working full-time for DAOs or working at Chainalysis in Switzerland, like big names in the crypto space. So it's a cool opportunity, totally free. Check out the website, defitalents.io. Feel free to apply.
Cool. Nice.
Michael, do you want to share some tips?
Yeah, once again, I totally agree what Zoltan was saying and Cedric was saying. I would recommend to really deep dive into the technology, trying to understand the technology before applying it. I think understanding the technology, playing around with it is the most important thing.
Astrid, I don't know if you heard the question or if you...
Yes. No, absolutely. So basically, I would also say like, well, have an open mind and learn a lot. I mean, Frankfurt School is one opportunity, and University of Nicosia also has a quite interesting master's program. Then there's also the Token Engineering Academy, which is actually also a free course just on token design, which is also something that is quite useful for this space. And basically get your Twitter ready, because I think most information you will also find on Twitter these days. So most discussions, most analysis also from like Terra Luna, what was happening, and sort of all the kind of on-chain analysis that was actually happening, apart from the myths and all the rumors that were spread around. But sort of that's my key take on it. But also just don't try to fall for maximalism, because I think it is a multi-chain world. I mean, as you had just said also previously around layer ones and all that, I think there is still a lot of innovation that will happen. I mean, EVM has become something of a standard these days, and it's very difficult to bridge actually to non-EVM bridges, like, for example, non-EVM infrastructures, not bridges, sorry, like Algorand, for example, it is. So it's very, very difficult to get interoperability done in a good way there. But it's still not too late to get into this space. So it's still, I think, manageable pieces of information that you can get together to make a good start in this space. Yeah.
Yeah, very, very interesting points. Yeah, I mean, the open-mindedness, I think, is really one of the most important ones, because no one possesses the truth, because we are all just learning and exploring and this open develop. So interesting insights. So
I pick the next questions. What are the main legal and regulatory issues with dealing with regular investors and alternative investments such as real estate through tokens? From Tom. To all of you.
Well, opening the regulatory box might be a bit too much for this evening, I would say, but also to keep it a bit shorter here. When dealing with retail customers, it's always very important to understand what they know, to ask for their knowledge about the investment product, of course. Talking about the risks, informing them about the risk of the investment, that those are the most important thing. Also from a regulatory perspective, I would say the rest is too much, and actually would be a legal deep dive into regulatory of tokenization.
I think that in general, I mean, if you think about regulation, it's very good that we're getting more of it, but on the other hand, we also need to make sure that regulators understand the technology well and actually are always in constant discourse with technology leaders or people operating in this space. Also for funds, I mean, it's become much, much better than still 5 years ago, where it was really difficult to find any kind of structure that would allow you legally to hold tokens. So that was really an issue at that time, and with really creative solutions that had to be employed to make it possible. So these days you can at least get a standard sort of VC structure, like in the German speaking space, like GmbH and Co. KG. However, there's still some difficulties around being able to sort of employ the whole spectrum of sort of Web3, like staking, for example, and lending, all that. So there's something that is still something that also separates us from classical VCs. And then you have the option if you want to become sort of like a commercial fund or not, which if you do, so if you conduct staking, for example, in this kind of regulatory regime, means that you will have to pay extra taxes. So we, for example, decided not to do that. But that's sort of something that I feel still needs to be developed further, also for regulators. And it was also one of the reasons why we actually went with our fund to Germany and work with the BaFin, that is already more acquainted really with these terms. It is already a little bit more ahead of its time, basically, compared to Austria with the FMR, where it's still very, very difficult to actually get something like this through.
Many thanks. So the last round, some words from your sides, from each of you. Zoltan.
Yeah, let me start, because we talked about gaining experience, and I wanted to refer to DLT Austria. So if you want to meet like-minded people who already have experience in the crypto space, either technical or legal or financial related, then join the association, come to the gatherings, and you will meet a lot of interesting people there and learn a lot.
Thank you, Zoltan. Michael.
tokenization of assets is the biggest revolution in investment sphere, I would say. It opens the market to everyone and makes it accessible for everyone. It has the possibility to make inefficient markets more efficient, which actually means that the value of an asset is reflected by the trading price. So tokenization of assets could be a big revolution, or actually the biggest revolution we've seen on the financial market so far. So we all should keep pushing it and keep working on it.
Many thanks. Cedric.
Totally agree with Michael. I think right now is a great time for crypto. The market is maturing. We're all still here. We're all still talking about it. And if you're here in the audience watching this right now, you're probably still ahead of the curve. So don't be shy, ask questions, continue your journey. Feel free to reach out to me or most likely anybody else in this call. I think we'd be happy to chat. A lot of the people in the blockchain community are all united by an unbelievable passion for what we do. And so I think you'll feel right at home.
Many thanks. And last but not least, Astrid, it's your turn.
Yeah, so basically I would say like what hasn't been tokenized will be tokenized. The future is really up for tokenized economies, and also for sort of revolutionizing also the financial system as we know it. So I don't agree with anyone who's saying that like crypto is worthless or worth nothing. So, I think some are very prominent saying this quite recently. Not mentioning any names, but yeah, I think like keep an open mindset. I think this is a very interesting space to be in, very intellectual, challenging, and so interdisciplinary. So I enjoy totally working in it as it's sort of the real technology of our lifetime, and open up so many opportunities for many people, and hopefully also creates a more level playing field for everyone.
Amazing. Many thanks, Astrid. Thank you all. It was super interesting, and I hope we see many more new exciting projects in the future. So, Martin,
yeah,
it's your turn.
Also from my side, I mean, we almost 3 hours past now. It was a super interesting discussion from many different angles. We covered the whole topic. Thanks a lot for all of your contribution. For all the listeners, if you scan this QR code, you get the link to all companies and presenters so that you can catch up. And I think we're also, as already mentioned, connect to each of you. And yeah, for those who are in Vienna,